All right, well, good morning, Checkmate crew. It's about 45 minutes after the opening bell of the New York Stock Exchange. It's about 10:15 a.m. Eastern Time, a little bit before then on this Tuesday, March 21st, 2023. It's yours truly, Mickey Blindside, here with your market memo. Hey, guys, it's been a while since I've seen you guys. I've been really busy traveling due to work. And finally, I had some downtime where I could get live with you guys and go over the markets and go over our positions. Since the last time we talked, we started the 10K challenge account and wanted to review that as well. So thanks for sticking by and dealing with all these schedule changes. But hopefully I'll be able to do these videos on a more regular basis. But without further ado, let's get down to it. Now, the last time we all talked, I believe it was before all this whole banking fiasco, these bank runs and all that. Long story short, this is not going to be a disaster. Okay, we're going to get out of this. If you look at the data, this is not going to be a big event. It's pretty much contained. I know there's a lot of narratives out there saying how scary it is, this and that, but it really isn't. And it will be fine. I'm not some like permabull or something like that, you know. I just think that the real problems are still some ways away. You know, we talked about our thesis. I don't know how many times we talked about our kind of extended secular bear market with inflation 2.0 coming. You know, we talked about this at length many times. And so I think it actually strengthens that thesis, because here's the thing, you know, now that there's all these like, oh my God, you know, these you know, the banks are going to fail and all this. Now there's all this, you know, expectations that the Fed will cut interest rates, which is, you know, which actually is going to fuel the next wave of inflation. So let's get right down to it. So here is the Fed funds rate. We are pricing in. Let me just update this because the markets did just open. I just updated this right before the markets opened. Yep, we're still there. So, all right. So we're pricing in a 83% chance for a 25 basis point rate hike for tomorrow. Okay. It was around 50-50 actually beginning about around last week. It was actually around 50-50 with all the, you know, the banking fiasco, the whole like, you know, First Republic and these banks, that banks, whatever. But now, you know, as cooler heads are prevailing, it looks like we're going to have a 25 basis point rate hike in May. It also looks like we're going to have around a 25 basis point rate hike. But now here's where things start getting really interesting. In June, we actually have a decent chance of a rate cut. That's right. You heard me right. A rate cut in June and another rate cut in July. And actually in pre-market, this one was actually higher, the 450, 475. So we actually had a very decent chance of 2 rate cuts in July, but I think right now it's changing. Now it looks like 1 rate cut. And so it's, you know, the market is now going back and forth between 2 rate cuts or 1 rate cut by July. Okay. So that is right now what the market is expecting. And you know what, it's going to be just like the 70s. Like I said, it's going to be too soon. It's going to be too soon. You know, the inflation is still at what, 5-6%, and they want to cut interest rates. Okay, let's see how that goes. We'll see. I mean, I do think that inflation is one of those things that just doesn't, it's a sticky problem. It doesn't just go away like in a year or something like that, especially inflation that goes that high, okay? So I do think that we're probably going to see inflation 2.0, and again, that's going to probably be around October, November. That's when the cracks will show. We're probably going to have something like an emerging market solvency crisis then too, as inflation goes up, as the expectation for higher rates will go up, dollar will go up, you know, and there's going to be some dollar hoarding, and commodity prices are going to increase again too. You know, that's the thesis. That's the thesis that since we had last year. I think it's playing out. It's playing out. Now, of course, there were some hiccups and bumps along the way with this whole banking fiasco thing. Since the banking fiasco, there's been a lot of like Twitter talk about, oh my God, I can't believe I'm saying this, but Bitcoin and Ethereum as like the safety trade. That's the most ridiculous nonsense I ever heard in my life. Okay, that's just total nonsense. Okay, so let me break it down. All right, so let's take a look at one of my favorite ratio charts. You already know what it is, IVWIVE, which is growth to value. Growth to value has been going up. Okay, growth to value has been going. Why? Why is growth having outperformance over value stocks, especially since the 8th and 9th when all those banks failed? If you remember, 9th and 10th was around when we had those big sell-offs in the S&P 500. Let's just go to the S&P 500 real quick. The S&P 500 daily chart right here. See, this is the 8th. 8th was business as usual. 9th, boom. This is when like SVB said that, they had that run on the bank on SVB. And then over the weekend here, this is where like, the Signature and all those banks were shut down. By the way, Signature had enough assets. That was kind of weird that they shut it down. They shut it down preemptively, actually. They said that because they don't want it to spread and they don't want any like decisions to affect depositors, they went ahead and shut down Signature Bank, even though they had enough assets to cover. Which is very interesting. I think in the future, in the years to come, when they do research on this, they're probably going to come to the conclusion that that was an overreaction. All right. But anyway, the markets have weathered it quite well. We'll see what happens. The market is pretty much flat now since where it was on the 8th. We're pretty much right there. The market's like kind of dipped 4% or so, and then now it's just back to normal. However, that's the S&P 500. That is the S&P 500, okay? However, if you look at the Nasdaq, completely different story. Look at that. Tech stocks went up. Okay, so is it really flight to safety? Is the Bitcoin and Ethereum story flight to safety? Okay, I don't think so, all right? Let's take a look at Bitcoin prices. Oops. I'm a little bit rusty, I'm not used to like all of this now. I'm so used to using my phone because I've been on the plane so much that I've been just using my phone. But let's take a look and see where is Bitcoin. I've already lost touch with my own systems. Okay, so Ethereum, here it is. So 8th right here, banking crisis, boom, up. We're up like, I don't know, like 15, 20% on Ethereum. Bitcoin, we're up like 20 to 30% on Bitcoin since the 8th and 9th, the bank runs, okay? So everybody on Twitter is saying, oh, this is flight to safety. Everybody's selling their stocks to get into crypto, which is stupid. That's a stupid narrative, and that doesn't make any sense at all. If you actually look at IVWIVE, we actually caught a bid in tech. If you look at the NASDAQ is up. If you look at SMH, like, all these, like, what is it? The chip makers, they're doing actually well too. They're up since the bank runs. XLK, which is the tech sector, is up. Growth is up. Then what is this flight to safety narrative? Okay, it's not flight to safety. It's actually, if anything else, actually, I think the more accurate term is a flight to growth speculation. Why are people speculating on growth? Well, here's the reason why. Because right after the 8th and 9th of bank runs, look at TNX. Look at the 10-year Treasury. Boom, it fell. It fell from around 4%. Now it's around 3.5%. All right. So as interest rates come down, all right, people are more willing to speculate on future growth. That's it. That's what it is. Bitcoin and Ethereum are just proxies for future growth. All right, it's just a leveraged bet on future growth. It's not safety. That's the dumbest thing I ever heard in my life. And then people are saying, well, what about gold and what about silver? I mean, there's some I'm not gonna, I'm not gonna say that there's not some people out there that took their deposits out, especially after the Credit Suisse announcement. After Credit Suisse said that they were gonna shut down in Europe, we actually saw a bid for gold as people took money out of European bank deposits and actually put it into gold bullion. That is somewhat true, but the gold usually catches a bid when yields come down. Why is that? Well, when yields come down, there's less of a pain of losing out on deposit yield, right? When yields go up, people tend to get rid of their precious metals because precious metals don't produce any cash, right? Bank deposits produce interest yield. Your gold bars do not. There's no yield on your gold bars, all right? It's just a store of value. There's no interest. There's no income. There's no cash flow, all right? But with bank deposits, there is cash flow. So as interest rates go up, the opportunity cost of missing out on that yield increases. So there is this phenomena where people will cash in their gold and go into bank deposits to get that cash flow yield from their deposit yields. Now, if deposit yields go down, it makes it a little bit more attractive to have those gold bars, okay? The opportunity cost is not as high as having those metal bars, all right? That's mainly the reason why we've seen the bid in gold, all right? It's because the yields are coming down, so the opportunity cost is less of missing out on that yield. All right, so that's the 10-year, the 1 year. See, all the yields just dropped. 1 year, 2 year, 5 year. I mean, when yields are dropping like this, yeah, people are going to go for duration. They're going to go for a little bit of growth speculation. I mean, it is a little bit of you can call it a little asset rotation, okay? So it's not a flight to safety. It's a flight to growth speculation. I think this reverses at some point. This will reverse because we still have that debt ceiling vote, okay? When the debt ceiling vote comes out, all right, after that debt ceiling gets passed, we're probably going to see the U.S. Treasury sell a lot of long-term Treasury bonds, all right? And that's going to cause yields to spike, I think. And so we're going to probably see rotations back and forth, violent rotations back and forth throughout the first half of this year. I think that's going to be normal. So we're going to see like huge outperformance in value and then huge outperformance in tech and back and forth based on bond yields and bond volatility. If you want to see a measure of bond volatility, remember the MOVE index? I mean, this thing shot up this day right here on Monday, the 13th, right after, the 12th, where the Fed came out and shut down, the Signature and SVB, and they put out that BTFP, that funding facility. This was a huge spike in the implied volatility in bonds. I haven't seen anything like this since 2008. This in 1 day. That was a huge move in volatility, and that was like a sign that we were going to see some volatility in the markets. That was, a big clue. And so that was very interesting. That one move was huge, and sure enough, we saw volatility enter the markets. Now, speaking of volatility, let's take a look at the VIX. The VIX, I mean, this is crazy too. I mean, we haven't seen anything like this since probably 2016, probably since Brexit. I want to say Brexit was probably the last time we saw something like this where it just goes back and forth in this huge range on a daily basis. Actually, let's go back to Brexit. It was around here. Brexit. It was around here. I forgot what the exact dates are. I think it was this one right here. Yeah, I think it was this. So we haven't seen anything like that, back and forth, huge movements on a daily basis, for multiple days in a row for a pretty long time. I mean, and it's range bound too, which is kind of interesting. It doesn't spike up like other risk events, other risk events like COVID or something like that. It was a huge run up and a huge drop, right? Well, this one, it was kind of just you can almost say in a box, and it was a huge box, and it just went back and forth on a daily basis. Again, this is not usual. So for those of you who are day traders, especially in UVXY and volatility and VIX futures, this was money maker for you guys. This was a cash register. So for those of you who are day trading volatility, and you guys made it out alive, you probably made, a good amount of coin on that. So congratulations to you. All right. Speaking of which, in the beginning, I talked about our 10K account. So let's talk about our 10K account. So yes, we got into Chevron, we got into Mosaic. The timing, yeah, could have been a little better, but we did it right as this volatility happened. And again, from the data, I put on Discord that I didn't think that this was going to be a big issue. Yeah, of course, the market tantrumed a little bit longer than what I had hoped, but, I think it's going fairly well based, considering what's going on. We're a little bit underwater on this, but I do think that in time, this will come back up. Oil, had a sentiment shock as well, too. Oil went down. I do think, though, as the markets, price in a more quote-unquote dovish Fed, I think all of this reverses. I think oil is going to come back up. All the commodities are going to come back up. I think, too, that potash thesis that I have where there's going to be a shortage of potash fertilizers, I think that also is going to materialize. We'll see. I guess time will tell, but I think inflation 2.0 is on its way. One of the charts that I wanted to share with you guys was the oil to gold chart. A lot of people think that oil is at this high or whatever, but I actually argue that I think we're at a low, and you wouldn't notice that unless you saw the oil to gold chart, which I have saved here. Yes, right there. This is oil to gold. Okay, oil to gold. Now, oil to gold on the weekly chart looks like this. Okay. Let's actually look at monthly, so we can just go back just a little bit more. This is the monthly chart, okay? This is the monthly chart, and it goes all the way to 1960, okay? Now look at this. Look at this. Are we at highs? No, we're not. If you actually compare it to gold, we're not. We're actually at near the lows. We're near the lows, okay? Average is around here. It's around 0.07, 0.08, all right? Gold has been just rallying hard in the last couple of weeks. Gold has been falling down, and so it's caused this, a drop in the oil to gold ratio. I think that this is going to make a trend reversal, and it's going to start going up on a monthly and weekly chart. Okay, actually, on the monthly chart, if I may say so myself, guys, how I feel about. Chart formations or whatever. But if one wants to be technical, I mean, it kind of looks like a head and shoulder formation, right? This is the right shoulder being formed. Okay, it could be, and this is the neckline right here. I wouldn't be surprised if that happens, and by the end of the year, or maybe end of summer, end of year, we see this going up to like 0.9, 0.1 or so. Right now, with gold at around, let's say $2,000, let's say it comes back down to, 1,800 or so, which is very possible. I don't know. Maybe it might go up even more, but we're talking about oil then at around, $150 to $200 a barrel. Okay. Will it happen in one move? Probably not, but I think based on gold prices, that's not so far-fetched to say. It's not so far-fetched to say $150, $200 oil at some point, probably in the next, maybe end of the year to next year. Well, at least that's the thesis. So I do think that, this has a very good chance of playing out. And, Chevron has every benefit of that. Well, most oil companies are going to benefit very much from that. So, again, if you price it in dollars, yeah, I get it. If you're looking at the dollar chart and, you're looking at since the 90s, yeah, I mean, you might think that we're kind of still high, but if you actually look at it in price of gold, no, we're actually kind of low. Speaking of energy, nat gas is also kind of just sitting around here. Let's see. So, nat gas is still just, languishing around here. I do think that at some point nat gas will come up too, especially with the fertilizers. As the potash fertilizers run out, they're going to have to go to urea-based fertilizers, and urea-based fertilizers are made over natural gas. I think there might be some competition amongst Asian buyers and European buyers for natural gas sometime at the end of this summer, maybe early fall. I think there might be some competition, and so that might drive up some prices. That's the thesis at least. I do think that it comes back up, and we start seeing, at least in the 4 to 6 range. I don't know about going up all the way to the $10 range, but 4 to 6 definitely can see that as a possibility. We have MOS. In case, by the way, there's another, if you want to go for a more pure nat gas play, there's EQT Corporation. EQT, this is a pretty good pure nat gas player. They've actually got a pretty decent balance sheet, not too bad. I mean, they got a little bit of current debt, I believe, if I recall correctly, but I think they can easily pay that down, especially since their margins are pretty good. And their business is quite strong. They're paying a pretty good dividend as well too. Their dividend payout ratio is quite low, so their dividend is for now it looks secure. So this might be a play if you guys are looking for a more pure nat gas play. This might be a play for you. We shall see. Again, it depends on how my other positions are doing. As you can tell from the 10K challenge account, we right now are fully vested in Chevron and in Mosaic, so we'll see how it goes. But that is another play for you guys if you guys want to use that instead. All right. Gold is coming down a bit, but it went all the way over $2,000 at one point. Silver also, enjoying some of a rally in the last couple of weeks. SILJ, totally missed my opportunity to enter that one, per usual. But I do think that it may actually still keep coming down. And again, for silver, I really want to make sure that my data goes along with this, okay? I want to make sure that the data goes along. I want to see the dollar go up just a little bit more. And again, our indicator for the dollar, USDINR, which is the Indian rupee, I still think the Indian rupee is going to show us the way. The Indian rupee has kind of just been hovering around this point, but I think if the Indian rupee breaks out, that's going to be dash for dollars. It's going to show us that there's going to be dash for dollars from the emerging markets. And so we shall see if there is a dash for dollars in the emerging markets. This is going to show us the way. If this breaks out, boom, I think dollar breaks out. SILJ and silver and gold, they drop. Easy as that. So it's just a wait and see game for that. All right. As far as internal market liquidity data is concerned, we had 2 days in a row advances over declines last week, but then yesterday we had a decline. So now we have to start over again for looking for if you're looking for 4 days in a row of advances over declines, that starts over. Okay, so yesterday we had declines. I know I didn't post yesterday's numbers. The last time I posted was on Friday or over the weekend for Friday's numbers, so it should be pretty up to date as far as last week is concerned. So all I have to do at the end of today is update it for yesterday and today. So yesterday we had declines over advances. So we shall see. We shall see if it gets better or not. Also, too, when you look at the New York Stock Exchange high-low line, what is going on with my? NYHLDJ. Okay, hold on. Let me. It just kind of deleted all my information. Let's just go ahead and rebuild this. I need the cumulative. Okay. No, these were... I forgot. I saved it somewhere. I forgot what my EMAs were. I think it was the 4, 9, and something. I wrote it down, but I have to look for it. I think it's 4, 9, and 20, right? Is it 49 and 20? I think it is 49 and 20. I'll make sure of that. I'll make sure that. What is this? What the hell is on my screen? Oh, what the hell is that? Eesh, technical problems, guys. I think it is 49 and 20, right? I think it is 49 and 20. So okay, 49 and 20. If it's wrong, I'll fix it. Okay, I'll fix it for next time. But yes, it's the important thing is it's curling down. It's curling down, and it's still has a potential of making a higher low. Okay, it has the potential of making a higher low. So, all right, let's take a look at the high low right now. Just the high low for today. The high low for today is close to neutral right now. Okay, so if it can, starting from today, okay, if it can start neutralizing or flattening out and rising, that would create a higher low. Okay, that would create a higher low. That would be a pretty compelling swing long signal, okay, on the indices. All right, and which indices am I looking at? QQQ. All right, I know in the beginning of the year I said something about IWM, but IWM has a pretty large exposure to regional and small banks. So with all this like sentiment shock going on about banks and banking, I don't want to be involved in any small regional banks. And in no index, and if there's an index that has all these financials, I just don't want to be in that. I just don't. Okay. So going long would be QQQ, Nasdaq. That's the one you want to go long on. Okay, especially with the TNX falling like this. Now, of course, it's going to be a swing position. It's not something that I would want to keep for a very long time. It would be something like a swing. So I'm looking at some call spreads or something like that as a possibility. But again, I want to get that confirmation before we go long. If we see that this is going long like this, and then also TNX is not spiking up so much, I will venture into getting into SILJ. Okay. I'm willing to get into SILJ for that. All right. But again, we shall see. I don't know yet. It's going to be all data dependent. I got to see our junk bonds ADL line start curving up 4 days in a row. And I need to see this make that higher low. Okay. No SILJ positions and no QQQ positions until that happens. Okay, at least that's for me. You can do whatever you want, but that's what I'm gonna do. Okay, crypto. Let's follow crypto for a second. Now, crypto. Let's talk about crypto options for a second here. Okay, crypto options. The open interest, all right, has been skyrocketing. Okay, that thing is going way up. All right, I think for Bitcoin, it's like $11 billion. Right now it's at $6.9 billion for Ethereum. We're already starting to get at the levels of that merge. Remember at the merge, we went all the way up to like $8 billion. So at $7 billion, I mean, we're almost there. We're almost there. Okay. Now we're really got a lot of activity when it comes to crypto options is actually in Bitcoin. In Bitcoin right now, 11.3. I mean, look at this. I mean, we are up there, okay? A lot of call buying. A lot of it is for end of this month. I think there's a lot of bets for this FOMC. There's a lot of bets for this FOMC. So if Powell starts getting like, I don't know, if it seems as if the market is taking Powell's speech after the FOMC announcement as kind of dovish, it could be like buy the rumor and sell the news kind of an event. I wouldn't be surprised if that happens, especially since all these call buyers just kind of like piled into this. At some point, they're going to need to exit, right? All of these are calls. All of this call buying. That's just been like the story for the last couple of weeks when it comes to crypto options. Just call buying. So at some point, I do think it's going to unwind. You know, you know my favorite line, after laughter comes tears. So we shall see. That's just what I see. If you have to monitor just a handful or just a couple of charts, okay? If you want to make life easy for yourself, this is what you need to look at, okay? You got to look at yields, TNX, 10-year treasuries, okay? 10-year treasury yields, if this keeps, what the hell are these lines on my thing? Anyway, if the TNX just keeps going lower and lower, we're going to see that bid on tech stocks get stronger and stronger. So we're going to see that tech outperformance, especially the WIVE chart. This chart is going to keep just skyrocketing if TNX keeps coming down. If TNX reverses, however, and goes back to like more normalized, you know, around like 3.8, 3.9, then we might see a little bit more equal kind of, you know, IVE and IVW growth and value kind of even out just a little bit. All right. So it's really dependent on this rates. Okay. It's really all about rates. You monitor this. Monitor the dollar, but if you want to monitor the dollar, you got to look at the Indian rupee. All right. And so I think those are really going to be telling on which way the market wants to go in the next few weeks. That's, you know, if you had to look at two charts, those are the two charts. It really hasn't changed all that much. By the way, TIP TLT is still in its box. I'd love to see this break out. That will be very good for MOS, for our MOS holdings. Would love to see that happen. Let's see where corn is at. Remember we had that corn spread not too long ago, like a few weeks ago, which I got stopped out of. You know, but you know, if I had kept it, I think I would have broken even by now. But oh well, it says life less trading. But this is also, you know, corn took a dip and now it's kind of back here. I'd like to see corn, you know, explode to the upside. That would just reinforce our thesis on MOS and the fertilizer situation that's going on, or at least the fertilizer situation that we're expecting. I do think corn goes up, and I think at some point either this year or next year. And so it may not even be this year. Maybe it might be early next year. I think people are going to wake up to the idea that oh my goodness, like, you know, we're going to have a corn shortage because we didn't fertilize the fields. You know, every 2 or 3 corn plants you need to fertilize the field, or you need to rotate into soy. Or else, you know, the soil goes bad. You know, the corn leaches a lot of nutrients out of the soil. So we'll see. We'll see how that goes. Look at the Australian dollar. Took a huge dip. Actually, what's Hang Seng doing? I'm curious. What is Hang Seng? Hang Seng has a lot of tech stocks. Okay, so yeah, I mean, pretty much looks like AUDUSD. I mean, that's no surprise. AUDUSD is our forward indicator for Chinese stocks. I've explained at length many times why that is. Just because, well, you know, just long story short, it's because China, when they, you know, have industrial output, when they need raw materials, they get it from Australia. So usually you see banks load up on Australian dollars in anticipation of more economic activity coming out of China. How's ZTO doing? Oh, wow, ZTO. Look at that. Should have bought that. Wow. What a great stock. I mean, we were looking at here from here at $21. And I said, oh, if it dips back down, but I should have chased. I mean, you know, it's like one of those things. If you chase, it's going to go down. If you don't chase, it just keeps going up. You know, Murphy's Law. Anything else you guys want to see, guys? Anything? Anything you guys want to see? Going once, going twice. All right, sold. In that case, that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the video description below. Come join our Discord. Be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show some love, baby. All right. So I'm going to keep you guys updated on the 10K account. As always, I'll give you live updates on what's going on. I will try to make this a little bit more regular. These, you know, broadcasts, I know, I apologize. I've been just very busy traveling back and forth, and sometimes it's really hard to get a reliable internet connection while you're at an airport. So I'll try to plan these ahead of time a little bit better. I'm still active on the Discord. Come ask, you know, questions. Come, you know, trade some alpha with us, and trade safe out there. Okay, tomorrow's FOMC, 2 p.m. Eastern time. Remember that. Trade safe. Don't take on too much risk. Hey, there's nothing wrong with sitting out until we have more clarity. All right, guys. I'll see you guys. I'll try to be back on tomorrow. I'll try to do this. I might have to do it in the afternoon, but I will update you guys on the Discord. Have a wonderful day. Trade safe.